How do you trade the chips right now? And does what we just heard from the Fed change what you would have said maybe even an hour ago?
It doesn't necessarily change, but unequivocally, we are seeing, to Christina's point, short-term pain, but long-term gain. 2019, the semiconductors were up over 60%. 2020, up over 50%. Even last year, they're up over 40%. So I think there's a deep discount. And I know I'm always opposed to catching a falling knife, but if you look at SOXX, the broad swath semiconductor ETF, I think there's an opportunity here. Yes, it's down 20% year to date, but even if you want not the broad swath diversified, I like Micron. Christina talked about Micron. They're looking at record revenues. And if you compare Micron and NVIDIA from a forward PE ratio, NVIDIA trades about 70 times forward PE ratio. Micron's trading about 10. So there are some deep discounts in semiconductors. So you have to be selective, you have to be careful. And a day like today, it doesn't feel good to be buying anything, but this is the type of day where you have to break out the shopping list. And semiconductors are still revealing relative strength from our tactical perspective. So I want to be a buyer here, but I want to be very selective.
Well, I appreciate you going out on that limb.
Got to buy something.
In a market like this, and we're going to push even further out talking about the cloud now. We told everybody that one of the ETFs tracking the group has lost a quarter of its value so far this year. Frank Collin maybe can help explain why. Frank?
Well, hey there, Kelly. Analysts and industry experts say the decline in the Wisdom Tree Cloud ETF and cloud stocks in general, they appear to be part of a multi-month slide that's actually running very contrary to macro trends, but has been fueled by a lot of questions about valuation. The fourth quarter, it actually saw cloud stocks fall due to the uncertainty of Omicron and rising interest rates, creating that downward momentum that we're now seeing continue into the second quarter. In Q4, cloud spending actually increased by 14%. For 2022, it's forecast to accelerate and grow by 22%. Companies in Europe and Asia are expected to be a catalyst. I've spoken with the Fastly CEO and some other cloud companies who have seen a spike in interest from those regions. Cloud generally seen as more secure, especially in the current environment that we're in right now. While the sector's been hit broadly, analysts say it's really higher valuation stocks that are leading the sell-off. The NASDAQ, for example, it has a forward PE estimate of about 28 times. You look at some of the stocks that are down. Snowflake, down more than 35% year to date. It's valued at approximately 1,000 times forward earnings. Datadog, down 23% year to date, valued at 268 times forward earnings. But you got to remember, cloud adoption is a secular trend. In fact, Deloitte out with a report this week urging companies to double down on cloud adoption and hybrid work not going anywhere. 90% of workers say it's easier or just about the same to work hybridly as in the office. Back over to you.
Yeah, we hear it a lot, Frank. And still, the question is, what do you do with the stocks? And is this about fundamentals, Jeff, or is it about some of the macro headwinds they're facing?
Kelly, it's a combination of the two. The 800-pound gorilla in the room is Fed Chairman Powell. We've seen such velocity of interest rates. Anything that's associated with tech certainly has been crumbling. So here we are looking at cloud, and Frank's absolutely right. We will not see investment abate from the sector. We will continue to see investment go into cloud. But when you're looking at, is it WCLD, the Wisdom Tree, that's holding 76 stocks. And yes, there's a lot of dislocation, to Frank's point, and some stocks have been oversold. But I think if you're looking at certain names, I like some of the old trusted names like a Workday, like a Salesforce, an Akamai. I think there's tremendous value because you have seen a lot of these stocks really get just haircutted due to the fact they had a couple good years. But cloud, very similar to semiconductors, will rebound. It is interest rate sensitive. And I go back to the camp that the Fed is jawboning so hard right now. This is the time to step in and be very selective on these purchases versus waiting for the bounce, because the 10-year note, the Fed cannot afford the 10-year note to stay above 2.5%. They're going to be paying too much in interest fees on that. So rest assured they're being very hawkish, but I think when they kind of have the next meeting, I don't see a 50 basis point rate the next meeting. That's going to really support tech, specifically cloud stock. So look at Workday, look at Salesforce, look at Akamai to have the opportunity to have a little bit of a bounce here, Kelly.